Well, joining us now to break down the market close is Eddie Ghabour, the co-owner of Key Advisors Group, LLC. Eddie, it's always great to see you. Thanks for joining us today. Why do we see the sell-off at the end of the day?
I'm surprised we haven't seen a bigger sell-off. Coming off of a year like we had last year, I thought we would see some profit taking because people didn't want to do it at the end of the year for tax reasons. Adding what's happening overseas right now with Iran, I really thought we would see a much deeper sell-off. We're down about less than 0.5% today. So frankly, I think this market's being a lot more resilient than what I would expect it to do, considering those backdrop that I just explained to you.
And Eddie, do you think the Fed will continue to cushion the financial markets?
I really do. I think the Fed this year is going to continue doing what they're doing. Interest rates right now, they're not going to raise rates. If I had to bet on whether they'd raise or lower rates this year, I'd bet on lowering rates. And they're going to continue doing what they've done in the overnight lending market and the repo market. And so we got an interesting dynamic from a bullish perspective that interest rates are off the table in regards to being a risk to the equity space.
I want to talk about tensions between the U.S. and Iran continuing to weigh on markets, but I think to a lot of people, not weighing on markets as much as they could, considering that the U.S. could be engaged in some sort of military conflict. What are you anticipating to be the effect of this on the markets in the coming weeks?
So frankly, I think there's 2 points here. The first I'll say is I think the market is underestimating the fact on whether Iran's going to retaliate or not. Because I feel like if the market felt that, we would see a bigger sell-off. I personally believe they are going to retaliate in some form or fashion. And unfortunately, when that happens, I think we are going to see a sell-off, short-term sell-off that I would look at as an opportunity right now. One of the other reasons why we may not have seen such a drastic sell-off is because of the fact that the oil market has held up pretty steady. Years ago, if this would have happened, you would have seen oil go through the roof, but our energy independence has certainly weighed in on that. But I do expect Iran, unfortunately, to retaliate, and then I would expect us to retaliate back. And that's going to cause a lot of volatility. So I think being defensive heading into this year and keeping yourself able to buy the dip if we see one, because if that does happen, based on what I'm expecting, I think it'd be a great opportunity for the right investor.
So I want to make sure I understand what you're saying, Eddie. Are you saying that investors should be raising cash right now in order to potentially buy in a lower market?
I personally, my opinion is I would have some cash raised after a record year like most investors probably saw last year, and I would be ready to buy that dip because I do think that we will see that. The volatility this year is going to be much different than last year, in my opinion. My biggest concern is there's going to be too much complacency in the marketplace by investors.
And since we're comparing here, Eddie, would you say that the market reaction to the Middle East right now is relatively subdued compared to past reactions?
Absolutely. I mean, I think we're seeing right now is one of the most resilient markets of our lifetime, where normal bad news, which would have caused a major sell-off, has really not caused anything from that perspective. Look at the volatility index. The fear gauge is just not there right now. So there is complacency in the marketplace, which is setting up for some type of sell-off that I would anticipate us seeing. But I still think 2020 is going to be a strong year in the equity markets.
Eddie, I want to talk Tesla here. It's just been an incredible 6 months for the company and really an incredible start to 2020 as Elon Musk jetted over to China for the official opening of the Gigafactory 3. How much higher can Tesla go at this point? I mean, the market cap of Tesla right now is more than twice as high as Ford, yet it produces a fraction of the number of vehicles that Ford does.
This is a head scratcher for me because I've been dead wrong on Tesla. I would have never thought.
You're not the only one, Eddie.
And now you're seeing these price targets being increased to $500 and some a share. To me, I'll take a more conservative approach. It just doesn't make sense to me fundamentally why this stock is as high as it is. And normally when fundamentally it doesn't match up to the price, there's eventually a price to pay for that. But look, here's what I've said in regards to Elon Musk. I haven't bet on Tesla, but I sure as heck wouldn't bet against him because he just has a knack of proving everybody wrong. There have been a lot of investors that have been short Tesla, and my goodness, they have gotten creamed.
What is the opportunity for Tesla in China, Eddie? Because, there are a few differing opinions here, right? You still have this Gigafactory 3, now churning out Chinese-made Model 3s for the Chinese market, coming at a time where China has seen slower economic growth, as well as more than a handful, I mean, literally hundreds of competitors building electric vehicles in China.
My guess is Elon is probably looking at the fact that they are maybe bottoming out because they have suffered economically, that maybe he's looking at this as a good entry point to start, because economically, if things start to go up because they've bottomed, he's hoping that their brand recognition will get the demand. But my problem or concern with Tesla is they have proven in the past sometimes having hiccups in their ability to deliver. I mean, if you look at what's happened last year, they really started to see this spike after they beat earnings in the third quarter last year. So, I mean, again, I would tread the waters cautiously here. If you're one of the lucky ones that have profited substantially from Tesla, again, to not be greedy, maybe you want to take a look at taking some profits when it's at a high level like it is.
Yeah, very good point. I want to get to some macroeconomic data before we let you go, Eddie. Investors are digesting this report from the Commerce Department saying that U.S. factory orders fell 0.7% in November. That's the third decline in 4 months. How are you reading into this?
Look, I think things are slowing down. Make no mistake about it. You know, I have been known over the last few years of being very bullish, and I have started to get a little bit more cautious and more defensive in our equity holdings, as well as how we're positioned heading into 2020. So things are slowing down, but the bottom line in regards to this bull market that we're seeing, the reason why, in my opinion, it is going to continue is because, again, when you look at the backdrop, as long as we don't go into a recession, so we can have a slowdown without a recession, and as long as the Fed doesn't raise rates and the consumer stays strong, it's my opinion this bull market is not going to die until we see a recession. And I don't think we're going to see that in 2020. So things are slowing down economically, but not to the point where we have any type of recession fears, in my opinion, this year.
Thank you so much, Eddie Ghabour, co-owner of Key Advisors Group, LLC. Great having you,
Thank
Eddie.
you.
Thanks,
Have
Eddie.
a great day.